In this video, I'm going to show you the best trading strategy to use in 2025 if you want to be profitable. No support and resistance, no fake value gaps, no order blocks. But what I'm going to be revealing in this video is completely different from all the things that you've been seeing, all the videos and the strategies that you've been seeing on the internet, on YouTube. I want you to pay close attention because the moment you miss one or two things inside, you're going to mess up the trading strategy. In my previous video, I explained the concept and how everything works. If you haven't watched that, make sure you watch that after this one. In this video, I'm going to be breaking down my own trading strategy, revealing how to trade it, the ups and downs, where to buy, where to sell, and hopefully at the end of this video you should be able to understand and fully grasp trading strategy and then begin to trade by yourself and then start making that money in 2025. And make sure you like and subscribe. There are three main components of the system. When it comes to my trading strategy, there are three main components that you have to pay attention to, and they are in order of priority. As you can see here, this is in order of priority. The first one is the pattern. The pattern is the most important component of the system. Then timing is the second most important element or component of the system, followed by the trend, or what I like to call levels. Now, each is going to have its own dedicated video, but in this video I'm going to be explaining the pattern. I'm going to explain the pattern in later videos. I'm going to explain timing, and then I'm going to explain the trends and the levels. All right. So first of all, the pattern. What exactly is the pattern? The pattern, there are three main patterns, right? Remember, patterns are the most important elements of the system, and then we have to be able to identify one of the three main patterns. The first one is what I call the multi-day pattern or multi-day formation. Right, this is an M or W formation that takes at least a minimum of 2 days to form. So it takes a minimum of 2 days to form. That is the first pattern. The second pattern is called the London breakout. This usually happens within a 24-hour period from the start of the day. So this line signifies the start of the day, and this one signifies the end of the day. So this one here signifies where day one ended, and then day two started here, and then you get the gist. So the London breakout, this is a 24-hour, this is a pattern that shows up in a 24-hour period from the start of the day to the end of the day. The third pattern is what I call the Asian range bounce. It's also a 24-hour pattern, like it works from the start of the day to the end of the day. This is more of a trend following pattern. So this one, regarding this one, you need to fully understand where you are in the trend and levels and all that. But the first one I'm going to be explaining is the multi-day pattern. If time permits, I might go through the London breakout and the Asian breakout, the Asian range bounce. If not, I'll just dedicate them to their own separate video. I think it would be better to dedicate them to their own separate video for proper understanding, because they are three completely different setups and they're traded in different ways. So the first one we're going to be dealing with in this video is the multi-day pattern. I'm going to be showing you how to trade the multi-day pattern, how I trade the multi-day pattern, where to buy, where to sell, the structure behind it and everything. And then let's see where we go from there. So if you're new to the channel, make sure you like and subscribe. And if you guys have any questions, let me know in the comments. And then if you're not subscribed to the channel, we'll subscribe, and then let's get started. So the pattern, how exactly is this multi-day pattern structured? So what I'm going to be doing is I'm going to be showing you the main structure of the pattern. So this pattern works. It takes a minimum of this pattern takes a minimum of 2 days to form. That's why it's called a multi-day pattern. Multi meaning multiple days pattern. So it takes a minimum of 2 days to form, and it can take anywhere from 2 to 5 days to form. So it can take 2 to 5 days to form, but it takes a minimum of 2 days to form. All right. And then how is the pattern structured? What you're gonna see is an M formation, where you're gonna have the first leg one day, and then the second leg the next day. So this is gonna be day one, and then this is gonna be day two. Could be day two, could be day three. Could be day two, could be day three, could be day four, could be day five. right? Any day that they form the second leg. And then the day is going to end somewhere here. So basically, what you're going to see is you're going to have price going up. Price is going to be going up, going up, going up. And then all of a sudden, it's going to pull back to form the first leg of the M, the first half of the M. And then it's going to start consolidating and end the day in consolidation. The next day, they resume with the consolidation and then they break out and come back to this first leg, tap the first leg, and then reverse. Now, there are a couple of rules to note when you're trading this pattern. The first rule is this forms as the highs and lows of the week. So the first rule to note here is this pattern forms only at the highs and at the lows of the week. You can only see this at the highs and at the lows of the week. That's the first pattern. That's the first rule when trading this pattern. Now, the structure of the pattern when it comes to understanding how the week forms is, let's say we have Monday all the way to Friday. So let's see, we have a line here, line here, line here, line here. So let's say this is Monday, this is Tuesday, Wednesday, Thursday, and Friday. So we have a 5-day trading week, right? Monday to Friday. What's going to happen is on Monday, initially like this, let's say price is here. We don't yet have the high and low of the week set. So everything is still fresh. So what happens is price is going to make a move. Let's say on Monday, let's say it makes a move to the upside, right? And then price is going to pull back and then start consolidating at the end of the day. Now, remember, this is the pattern that we're looking for. We're looking for that pullback. We're looking for this pullback. Now, this is going to be on the 1 hour charts. This is going to be on the 1 hour charts. All right, so we're looking at this structure on the 1 hour charts. If we're looking for entries, that's when we zoom into the 15 minutes. But right now, we're looking at the structure of the formation, and this is going to be, we're going to be looking at this on the 1 hour charts. So once we see this pullback, this is what we're trying to identify. We're trying to identify this pullback, right? Once we get this pullback, we know that, okay, this is Monday, and then that means if this is Monday and this is the highest point for Monday, so that automatically means this is the highest point for the week. So that means this is the high of the week. So this is going to be the high of the week. Now, looking at this, one thing I like about the strategy is that you're going to know what to expect the next day before it happens. So basically, you're going to be prepared for what's going to happen before the day resumes. So let's say you're looking at this on the Monday morning or Monday evening, wherever you are in the world, and then all of a sudden you have this pullback and then the day ends in consolidation like this. You just draw your box or draw a line at this high of the day, and then all you have to do is wait for price to go back to this high on Tuesday and then reverse off of it. Now, when price goes back to this high, that's when we're going to be jumping on the 15-minute chart to look for an entry. We're going to be jumping on the 15-minute chart to look for an entry. So basically, we are going to be selling at this area here on Tuesday. All right, and this is called a Tuesday reversal. This is called a Tuesday reversal. So let me recap what I just said. So we have the week started here. We have price made its move to the upside and then pulled back immediately away from that area. Then what do we have? Price begins to consolidate and ends the day in consolidation. So now we have established that this is Monday and this is the high of the week. And then we draw a line or a zone or POI at this high of the week. What you have to do now is wait for price to come back to that high of the week. Come back to that high of the week. We test the high of the week, giving us that second leg of the M formation. Once price gets to that high of the week, we jump on the 15-minute chart, look for an entry inside here. Once we enter the 15-minute chart, we're going to look for an entry inside here to take this back down. and that's called the Tuesday reversal. Now, it's not always going to be like this. It's not always going to be like this. Sometimes they're not going to reverse on Tuesday, and if they don't reverse on Tuesday, they're going to either reverse Wednesday or Thursday, right? And let me explain how it's going to work when it comes to reversing on Thursday or Friday. So let's just delete all this. So if price is going to reverse on on Wednesday or Thursday, what's going to happen is price is going to make it move up. Now it's not going to pull back. It's going to end like this. Then Tuesday is going to come. Then it's going to make it move up again. Now, if they're going to reverse on Wednesday, what's going to happen is they're going to pull back. Let me draw a better one. They're going to push like this. And then they're going to pull back. And then end the day in consolidation. All right. So basically, we established that the week started here, Monday. Price pushed the upside on Monday, continued that uptrend on Tuesday, and then coming to Wednesday, at the end of Tuesday, price pulls all the way back down. Once price pulls all the way back down now, what is interesting to us is if price comes back to this high, either on Wednesday or Thursday. So now, if price comes back to this high, we're going to be looking for a sell there to take this back down, right? And that's going to be our entry on the 50-minute charts, zooming in to this structure. Remember, this is on the 1 hour chart, right? Remember, this is all on the 1 hour chart, and then we're going to zoom in on the 50-minute chart to look for an entry, all right? If they happen to come back again on Thursday and then come back here again, we're also going to be looking for sells at that area once again. We're also going to be looking for sells at this area here. So as long as price keeps coming to this area, we're going to be looking for sells. If it comes back on Friday, we're also going to be looking for sells at that area. Once the week ends, then everything becomes invalid. Then you look for a new high of the week the next week. But as long as the week is still open and the week has not ended, if price comes back to this high, we're going to be looking for sells at those areas. So what I like about the strategy is you can take sells here, maybe close your trade here, catch that one. If price comes back, you take a trade here again, catch it. So that's like two wins in a row. All right. So whenever price reverses on Wednesday or Thursday, that's called a midweek reversal. So if price reverses on Wednesday or Thursday, it's called a midweek reversal. Why? Because Wednesday and Thursdays are the middle of the week, especially Wednesday. And that's usually where you're going to have high impact news events. That's where you're going to see FOMC or you're going to see CPI. It's usually on Wednesday or Thursday. That's where most of the high impact news is going to be. So the most volatile time of the market, the most volatile days of the market is Wednesdays and Thursdays. And most of the time, that's what they're going to be using to reverse the trend. That's where you're going to see most of these patterns. All right. So now, another thing to note is if they don't reverse on Wednesday or they don't reverse on Thursday, then there's a probability that they're going to reverse on Friday. So let's say they don't reverse Tuesday, they don't reverse Wednesday, they don't reverse Thursday. Let's say they keep going up. Let's say they keep going up like this. And they keep going up. This is Thursday. And let me raise these things up so you can see it clearly. I say they keep going up like this. And then they pull back. Friday, if they go back to this high, we're going to take the sell back down. Usually Fridays are not usually aggressive. So you don't expect to see an aggressive move on that day. But unless there's NFP or something, then you're going to see aggressive moves. But if they don't reverse Tuesday, Wednesday, or Thursday, you can expect a reversal on Friday. But the highest probability reversals are Tuesday, Wednesdays, and Thursdays. Those are the highest probability. Friday, not so much, but they still happen on Fridays, and you're going to see them happen on Fridays. So now, let me show you a couple of examples of this on the charts so you can get a better understanding of what I'm talking about. Now, this is, let me grab my pen. Where's my pen? Yeah. So This is, at the time of recording this video, this is where we are. This is current price action. And this is 12th of December. So the thing is, this is the pattern. You should be able to see it clearly. You can see Monday, Tuesday, Wednesday, Thursday, and Friday. All right. This is where the week started. This green line is where the week started. And currently we're on Friday, so the week is about to end. So we're in here. So this is a 5. This is the entire week in one view. Now this is also the 1 hour chart. If you look up here, there's a 1 hour chart. So remember, I told you we're going to be identifying this structure on the 1 hour chart, but then we're going to zoom in to the 15-minute chart to look for an entry. So now what we're going to be looking for is the pattern that I just showed you. Remember, the week is going to start, and then we're going to make a move to the upside or to the downside, and then reverse off of the high or low of the week. So in this example, they're reversing off of the high of the week. What do we have? We have Monday. The week started here. What do we have? Monday made this move up like this. Made this move to the upside from the high of the week, because this is the highest point on Monday. So if that's the highest point on Monday, so that's most likely the high of the week. That's the high of the week. Then price pulled back. Remember, I told you they're going to pull back like this and then start consolidating. If they go back there, then that's where you're going to look for your entry. So now we have identified that price has pushed up from the high of the week and then pulled back. Now what we're going to be doing is we're going to be waiting for price to come and retest that high either on Tuesday, on Wednesday, or on Thursday. So now in this example, you can see this is the high from the body of the candle to the wick. That's the high. You draw your box there. Draw your box and extend the box out. That's going to be our point of interest, POI. So whenever price comes back to this area, we're going to be looking to sell. So that's an area of interest or area of liquidity, whatever you want to call it. So we can see that price came back on Wednesday, tapped it here, and then fell all the way down for like 50 pips. So price tapped the area here, rejected off. You could have easily sold this there all the way down. Price came back on Thursday, came inside, rejected off of it. I took a sell here. Put my stop loss above, and I cut the trade all the way to this area here. This was like a 50 pip move. So I sold this. I also sent this to my free Telegram. I sent this straight to my free Telegram, also to my Signal group. I sent this, told them to sell here, put their stop loss above, and then we cut the trade down here. So this is a very, very perfect example. Now you can notice that they didn't come back here on Tuesday. They came back on Thursday and Wednesday and Thursday. So that's a midweek reversal. They formed the high and then they just kept on consolidating inside. Came, we tested it, consolidated again, came and we tested it, and then they finally reversed off of that area. So all this that's happening here does not concern us. All this does not concern us. What we're interested in is for price to go back to this area for us to look for a sell. And one thing I love about the strategy is that you can just set a limit, so you don't need to be on the chart too long. Once you identify this pattern, this pullback, and that's the high of the week, and you draw your box, all you have to do is just, if you're not going to be on the chart, just set your alert. Now I'm not talking about sell limits, I'm talking about your alerts. We're entering manually on this trade. So you set your alerts here. So once price taps it, then you come on the chart and look for an entry. Once price taps it again, you come on the chart and look for an entry. So all these other things that's happening in here does not concern you. So this is a very perfect example, and this is an example that showed up this week. Now the crazy thing is, the week before that, I caught another trade here and I sent it to the Signal group and sent it to my free Telegram channel, link in the description below. This is this week. This current week, we had 2 opportunities here and here to take a sell. I took this one. I didn't take this one because I feel this one was a bit clean, and they went a bit deeper into the box. This one just tapped it a little bit. All right, so I took this one here, cut it, closed down here. The week before that, I took a buy here, closed somewhere here. Sent this to my free Telegram. You can see this is Monday, right? What happened? They pushed down. They did not pull back on Monday. Notice they did not pull back on Monday. So Monday is not where we're going to be drawing the box. Now we come into Tuesday. What happened on Tuesday? Tuesday pushed down and pulled back and then stayed above. So basically we have this pattern here. No, we have this. This is the pattern that we have. All right. Then we're going to wait for price to come back to this area, and then we're going to be zooming in on the 15-minute chart to buy in here. That is the pattern I showed you, and this is going to be the low of the week. This is the lowest point for the week. You can see price came to tap the box on the 15-minute chart. It gave a W formation inside here. There was a W formation inside there. If you go on the 15-minute chart, in fact, you can go on this date. This is the 27th of November 2024. You can go on this date and look at it on the 15-minute chart. You're going to see that there's a W formation here. I took a W formation here. In fact, looking at this on the 1 hour chart, you can see the W formation already by looking at the wicks on the candles. I took a buy here, close it here. Took a sell here, close it here. Now, this is back-to-back weeks. So this is 1 week here, another week here. And that crazy thing is, the week before that, they gave the same thing. I took a buy in here and closed in here. Put my stop loss below. So we cut this straight here, and then cut the sell that was up here. All right. So this is 3 weeks in a row. 1, 2, 3. 3 back-to-back weeks in a row. What happened? What's the structure on this one? We have price started the week here. They went down, pulled back. That's what we like to see. We like to see the pullback. Price pulled back. Draw your box from the body of the candle to the wick of the candle. Extend that box to the future. All right, extend it to the future. All the things that are happening in here does not concern you. What you want to see is for price to come back to this box. Price came back to this box, give us some rejections. So you can see the way they are throwing pins at this area. Waited for price to enter back in. I bought somewhere in here. Price also gave a W formation on this one. You can check it, 22nd of November, and then went all the way up. This was on a Friday, so you can notice that price didn't reverse on Tuesday, although yeah, it reversed a little bit, but didn't give us the structure. Came back down here Wednesday, came back down here Thursday, and then eventually came here on Friday, came to stop on this area and to take out the liquidity here. Then I took the buy and went back up. So this is a Friday reversal here. This one that happened here was on a Wednesday. That was a midweek reversal. The one that happened here too was a midweek reversal because it was on a Thursday. Let's look at another example. The week before that, that's crazy. So the week before this, so now this is like 3-4 weeks in a row, 4 to 5 weeks in a row. So we have this week here. We have price going all the way up. All right. So they didn't reverse on Tuesday, didn't reverse on Wednesday, didn't reverse on Thursday. What now happened was price came down from this high. This is an advanced, this is a different variation. This is where the structure plays out across 2 weeks. So we have the high of this week here, and then we have the new week here, and then the high of the new week here and here, and then price reverse from that area. So basically, we have the high of the previous week here. Extend your box, wait for price to come back and tap into that box. You can see price tapped on the box here, tapped on the box here. Anyway you enter this would have been good for an entry, and then price went all the way down. Price tried to reverse off of this area, although they didn't reverse much. If you were scalping, you would have bought somewhere in here and then close here. You can see price from the low of the week here, extend the box, price came, tap the box, give you an entry there. If you're scalping, you would have caught this. If you're holding for longer, price came back to hit your break even, but that was still a good trade. This also here is a good trade. So how many trades have we seen right now? So we have one here for 1 week. We have two. We have that's 1, 2, 3, and then 4. 4 weeks in a row, 4 back-to-back weeks in a row of this pattern showing up. Now we have another week here. So we have another example here. So we can see the week started around this area here. So this is Monday. Price went all the way up, pulled back. This one tried to reverse here, but didn't reverse here. Then here on Wednesday, high of the week, we have the box. Price came back, tapped the box here, reversed. So if you took sell here, you would have closed. Let me clear this. So if you took a sell here, you would have caught this for like 40 pips. How do I know it's 40 pips? Because if you look at this, the Asian range here is about 35 pips. All right. So if you add this extra, that's about another 10 pips. So basically that's like 40, 45 pips. So from here to here, that's like a 40 pip move. Here's another area to take sales. If you didn't take sales on Thursday, they give you another entry to take sales here. That's another area to take sales. Put your stop loss above. Your stop loss has to be above the entry, above the candles that you're entering. So if you're entering here, your stop loss is like above here. If you're entering here, your stop loss above here. If you're entering here, your stop loss above here too. So that's a safe zone to put your stop loss right here or above here. We have another example here on the week after that. We have another example here. So we have Tuesday, Wednesday. This is a midweek reversal. This one is a Friday reversal, end of the week reversal because of the reverse on Friday, although they reversed a little bit here, but that was the full reversal. We have another one here, midweek reversal. This was the initial low of the week. If you extend your box, you can see price from the low here. We also have another one here that I didn't even highlight. This is another one here. Take your sales in here. Take your sales in here. Here to here, here to here. The week after that, we have the same thing. We have start of the week here. Price went down on Monday, pulled back. That's what we like to see, that pullback. And then came back to retest that box. You take a sell, take a buy in here or here, close somewhere here, or hold it to the next day. Here we have another beautiful example. This was a trade that I caught on EURGBP. So looking at this is a 1 hour chart. So we have Monday, price went up, pulled back. We wait for price to go back to that high the next day, which is the high of the week. Came back to retest the high of the week. I took a sell here, post stop loss here, and the trade hit my TP around here. Although this continued down for the next day. The week after that, we have the same thing. This was the trade I took here too. So we have the pullback, basically like this looks like the same thing that happened in here. We have the pullback, price came back to this area, so tap the box again, sell in here, put your stop loss above. Put your stop loss above. Your stop loss is at the safe zone. If price comes back to this area, now this is one thing I love about the trading strategy. If price comes back to hit your stop loss here, the trade is no more valid. So the moment your stop loss get hit, the trade is no more valid. So just leave that trade alone. This is not a trading strategy where you have to enter and then price takes you out, and then you enter again, then price takes you out, then you enter again, and then takes you out. Nothing like that. The moment price hits your stop loss, that tells you that trade is invalid. The trade is invalid. There's nothing there anymore. All right. So if you put your stop loss up here, if you sold here, that trade is invalid once you hit your stop loss. Right? They are not meant to break above this area. Right? They're not meant to break above that area. They're meant to stay below there. They can do all the rubbish that they want to do, all the sideways movements, but your stop loss is in a safe area and they're not going to hit your stop loss. Here's another example on EURGBP. We have the low of the week here. Extend your box. You can see that pullback that we like to see. Take a buy here, put your stop loss below. You would have caught this. So here, if you held it for a couple of days, if you're a swing trader, you would have stayed for this consolidation. And then what do we have? We have this huge move up here. So we have a trade here. You move to the next slide. You can see that immediately after you got this one, you got this one too. So if you took buys here, take sales here the next week at the high of the week, back to back, like that. And that's the power. That's the power of this trading strategy. And I think that's all for the examples. So I hope you guys found this interesting. If you have any questions, let me know in the comments. If you want an more in-depth explanation of how I trade this strategy, if you want how I like a more in-depth breakdown of the market structure, the entries and everything, I have a trading course that you can enroll for if you want to learn from me directly. Click the link below. The link is in the description. Also, if you want to join my free Telegram, I send out setups like this every week. So I'm sending out these setups, this exact strategy to my free Telegram every week. And then if you know how to trade it, then all you have to do is just take the trades that I take, and then you should be good to go. So if you want to join the free Telegram, the link will be in the description below. Also, if you're a new viewer, make sure you like and subscribe, and then I'll see you guys on the next one. All right, peace.